We're recording now. Good afternoon, traders. Nick Mastrandreo, Market Tea Leaves. Just wanted to, present a new type of material for you, if you will. I have a gentleman with me named Sal Spadali. Sal is an insurance professional, okay? Not of the trading world, not a trader, not an institutional, et cetera, et cetera. And what we're going to be doing is we're going to be talking about insurance, but specifically we're going to be talking about Obamacare, all right? In terms of how it can and will affect us in the time to come. So it isn't this is not a usual and customary type of presentation for us, but I think it's important because inevitably and eventually it's going to affect all of our pocketbooks. And as any one of my followers know, one of the things that I am very adamant about is I want to make absolutely certain you folks keep your hard-earned trading capital. Because without it, there is no business, if you will. So Sal, you grew up in Brooklyn and then decided, I guess, to be a pioneer to a certain degree, and you went west across the Hudson to New Jersey and then Pennsylvania. I guess, what propelled you to do that? Was there opportunity that you saw, maybe in other parts of the country?
Well, first of all, Nick, thanks for having us on the call. We hope to add some value to all of your subscribers, and hopefully this topic doesn't bore many people, but as you said, we want to keep money in their pocket. What brought me to the opportunity actually was job loss. I actually lost my job back in 1993 and had a family member who was in the insurance business and said, you can sell, why don't you try this? And I gave it a try back in 1993, and it's been 20 years running now in the industry. So, yeah, I went from New York to New Jersey to Pennsylvania, where I reside now, and still love what we do, which is trying to help other people every day and putting them in a better situation if we possibly can regarding their health insurance.
Interesting. So, basically, that was why you chose the insurance field, because I guess it was a job loss, and I'm assuming that you decided to try it and see how you liked it.
Sure. As I said, my brother-in-law was in the industry, and I knew if he could do it, then I sure as heck can do it, and that's what gave me the motivation to get into the industry, and as I said, I haven't looked back.
Okay. Okay, excellent. Yeah, because oftentimes, in the world of trading, one of the things that we talk about in the world of trading is this idea of financial freedom. We talk about the idea of freedom from economic servitude, freedom to do what you want when you want, without having to worry about where the next dollar is coming from. Was that, I guess, part of the motivation, if you will, to get involved with insurance?
Well, when I saw what my brother-in-law achieved over his 30-year career in the industry, having financial independence was always a dream of mine, and probably a lot of people, a lot of your subscribers. It is a lot of hard work in this industry, but the thing that I love the most about the insurance business is the ability to receive renewal and residual income. Nothing better than getting up every month knowing you have residual and renewal income based on your efforts that you put out, a month ago, a year ago, 5 years ago, and that's something that intrigued me. And having that residual book of business was something that would allow me down the road to pass on to my children some things that I can do for them that maybe wasn't available to me when I was their age. So that was really something that interested me in it, and I really fell in love with the business. I fell in love with the opportunity to, yes, make money, yes, help other people, yes, put money away for the future, and hopefully lead that lifestyle like you talked about, free of financial worries and always doing the right thing. So that's a big part of it. Interesting.
It's almost like getting a perpetual dividend on a bond to a certain degree. Only this one is is infinity to a certain aspect or to a certain point. That's very good.
Yeah, in our business, usually a block of business can run like in 3 to 5 year cycles because clients are always going to look for other ways, to save some money or purchase health insurance or other benefits. So, it's still having that constant contact with your customer is what keeps this business going.
Mm-hmm. True. That was one of the things, and folks, I think for those of you who know me, I mean, you probably know that that I do have a life and health authority in the state of New Jersey. And that's kind of one of the things that was always an attraction to me, regarding financial services. The ability to help people and know that I'm getting paid to do that. I can't think of anything more satisfying, from that point of view. I mean, knowing that you're doing what you do for a very good, very positive reason, it's a great feeling, to wake up to that every day, without a doubt. Interesting. So now you're operating in Pennsylvania, and it sounds as though you're offering advisory services to businesses or individuals who seek it. Is that correct?
Yes. Our main focus is on well, today now our focus is on everyone who has to purchase health insurance. It's predominantly individuals. It's mostly self-employed individuals and small companies in our area that we try to actually put a program together that's going to benefit their business and their employees.
Okay. And I guess you've been doing this now for the greater part of 25 years at this point. Yeah.
Yes, it's actually it was 20 years, May 28th, so 20 years a couple days ago. Okay.
So now I guess we're going to be talking or speaking on Obamacare. And I know this is somewhat of a controversial thing. I guess from your perspective, what do you feel the drawbacks to Obamacare, to this act, if you will?
Well, just to give people a little background first on it, March 23rd of 2010 is when President Obama signed into law the Patient Protection and Affordable Act, which we now call Obamacare, which basically was a federal health care reform that's going to impact a lot of Americans on their health insurance, going to impact the economy. Some of the things that have to be included or have to be included with this program are, additional wellness screenings and removal of, certain lifetime maximums and removal of some pre-existing limitations on insureds under 19. A lot of things started from then, and they've been now being phased in from 2010. And as we know, January 1st of 2014, most Americans either are going to have to apply what's called an Essential Health Benefit Plan, what's called PPACA compliant, for an acronym for our industry, or pay the penalty, fine, tax, whatever word you want to use. The biggest drawback I see, Nick, in this is in the lack of communication and the lack of consumer knowledge of what really is going to happen. The government wanting to put something out there where we're all insured, that's a grand idea. And we wish it can happen that every American has health insurance. The downside of it is someone has to pay for it, and as many people want to either be an ostrich and put their head in the sand, those revenues are going to be raised a lot of different ways. And if you're self-employed, if you're a business owner, realize that rates are probably going to go up, and we're pretty sure the rates are going to go up. To insure these people. Whether this solves the problem, I really don't know. But for me, the biggest issue for me is the lack of communication between the federal government and the general consumer. And if you've read anything along the way, some of the Democrats that put this plan together, like Senator Baucus, is actually calling it a train wreck. So he is one of the founders and one of the people who supported this from day one. Now, 3.5 years later, calling it a train wreck. So there's a lack of knowledge and communication, and that's what I see as the biggest concern or drawback on the plan.
Yeah, it seems as though there's quite a bit of misinformation out there. I mean, just for myself as a case in point, I'm a resident of New Jersey. And basically, my coverage is through my wife's coach. She has a COBRA plan, okay? And that plan is going by June 30th, which is the end of this month, ironically enough. And what I found on my own, and just doing my own little research, is that insurance premiums are going up. I mean, and they are going up not by a small amount either. I mean, they're going up, just as a case in point for myself and my wife. if I want the exact same coverage that I have right now, I'm going to be paying about $600 a month more than what I'm already paying, and I'm already paying over $1,000 a month, just to keep what we have. So, I mean, this is like a 60% increase, a 60% hike in one fell swoop, which and I talk to all these insurance companies about, what about Obamacare, and it's like, hey, look, and their attitude is, hey, look, if we have to cover 45 million people that heretofore, up until this time, we didn't have to cover, somebody's paying for it. Now, a lot of folks, myself included, we assumed that the government was going to pay for it. And in reality, I mean, the way I understand it with this voucher program, it really depends upon where you fall in on the income scale. Because if you're making, if you're making close to that, I think it was a $93,000 threshold or whatever it is, if you're making close to or exceeding that, there is no voucher for you.
Very true. No, that's absolutely the way it's set up. I mean, it's on a sliding poverty scale, if you will, and depending on where you fall on that scale is going to be the amount of depending if you're a business, a tax credit, or depending on the subsidy that you will get in the form of a reduction of premium. That's exactly right. And if you're self-employed and you have a business, which most clients do, these are the people that may not get any or a very small subsidy going forward. And a lot of them don't know about it. And as you said, that is the problem. And it's not free. There's no free one. There's no free where in our country, and that's what makes it so great. But we have to realize that things are happening here that may put people in a worse situation than what they are today, and that was not the intent of this.
Yeah, I can see that, just in my own rudimentary research, just doing this stuff on my own. I mean, it's kind of amazing to me, and I'm thinking to myself, even a small business for a small business, they let's say they employ, I don't know, 5, 10 people, whatever it is. I'm just wondering, if they decide, let's say a year end, well, all you folks, we're no longer going to have health care coverage. You're on your own. Go out under Obamacare. They're going to be paying. They're all going to be paying a penalty. I don't know. It's $2,000 or $3,000, whatever it is, and that's per person. But if you think about it, okay, well, I've got like 5 people. I pay $3,000 a person. That's $15,000. Or I have 10 people. All right, that's $30,000. The employer is saying, you know what, I have to pay $15,000 a year per person just for health insurance coverage. I could save myself a boatload of money by not even having it. And I kind of think that kind of defeats the intent or the purpose of the bill as well. But I didn't see anything in that bill that said that they couldn't do it.
Well, the penalty in 2014 is really, it's a nondescript number. It's a $95 penalty for an individual, and the family of 4, I think, was $290. And so basically in year one, it's really a non-issue where, as you said, going back to your point, would it be more cost-effective for that small business owner to put people on part-time basis or if his tax credit is not going to be worth anything or worth a couple of dollars, and realizing that employee still has to purchase insurance or pay the fine or penalty or tax, whatever word you want to use. And it's been, the street, a lot of us in the street think that it may be a more prudent way for a person to go than just to pay the penalty. If you're a single person, that $95 penalty, and, God forbid you do get sick, you can only get the federal plan through the government exchange during open enrollment. But, these people could turn into being gamblers and start to roll the dice. I don't know. I mean, I wish there was an answer that would help everybody, but in most cases, there's just too many unknowns out there. There are too many ways that small business owners may get around it. There are many ways that an individual can try to to play the system, And I think insurance companies may do the same thing, because what will happen is the way that this whole program was set up is they wanted all insurance companies to participate with this medical loss ratio to help everybody, including the government, pay these claims.
Mm-hmm.
And sometimes, we look at it as, it's like, me saying, Nick, I'll sell you car insurance after you have an accident.
Mm-hmm.
So if you happen to be lucky enough, and that's a bad word to use, but to get sick during one of those open enrollment months,
Mm-hmm.
there's no pre-existing conditions, you can roll in and purchase the plan. And again, it's just a lot of uncertainty in the industry. And
Right.
what our main goal as insurance professionals are, what we like to do and we strive to do, is to inform the small business owner, the self-employed individual,
Mm-hmm.
any individual who's purchasing health insurance. We want to let them know what their rights and options are
Mm-hmm.
under the federal ObamaCare plan. And a lot of people don't know that. And then they can make whatever decision they need to make for their families.
Mm-hmm.
By forcing people to buy a program that's $22,000, whatever the number is going to be for your family, if you don't qualify for a subsidy,
Mm-hmm.
that's a lot of money. And how are people, even if you couldn't afford that,
Mm-hmm.
people may just go and pay the penalty, as I said, and roll the dice and hope no one gets sick.
Yeah.
So
Mm-hmm.
it's crazy. It really is crazy. But again, in our industry, you try to keep up with everything as best you can. And now we're already in June, and open enrollment starts in October. We're getting closer and closer. And as
Yeah.
I said, we want to inform consumers of what their rights and options are. That's the best thing we can do as insurance professionals, and then put enough information in front of the client so they can make the best decision for them, their family, and their business.
Yeah, because I think that there are certain things that are in the basic and essential plan that are included, but there are certain things that people are used to that aren't included. So I mean, it's kind of a mixed bag in that regard, from what I gather, anyway.
Yeah, I mean, the essential benefit plan has so many things in it that have to be covered, like mental health and things that may not be in the general individual plan today. And a lot of the federal mandates. I mean, if you're a single guy and you go into the plan through the government with the exchange, why are you paying for OBGYN and mammographies?
Very true. Very true.
Right, or maternity coverage. So basically what's happened is the choice to the consumer is going away,
Right.
and it's more and more of a structured type of program that people have to purchase, or obviously so the alternative is pay the fine or penalty.
Right. And I've also heard that the enrollment process itself is somewhat cumbersome. I've heard some people saying that the application is 50, 60 pages in length, etc. I'm sure they're probably going to cut it down, but it still sounds as though it's a very cumbersome process, from what I gather, anyway.
And don't forget, too, this is state by state. Some states have opted in, and some states opted out. And if your state is opted out, there's going to be no, help or subsidy here. You'd have to go through the federal government, exchange program to get it. You can't go through the state plan to do it because, for example, Pennsylvania is opted out. They're not participating in the exchange. So it's going to be a harder process for a Pennsylvania person who may qualify for the subsidy to actually, navigate their way through this application process. Yeah, I mean, the first go around, they thought it was going to be 50-something pages. Now the last we heard it's going to be in the 20s. Who knows? I really don't know, but they're going to be asking questions, obviously based on your income. You're going to have to show tax returns. You're going to have to, prove citizenship. The IRS is the governing body on this. They're the ones that are the gatekeepers of this plan. So, there are a lot of information pieces that are going to have to be included here to see if you are compliant. And again, I don't know, Nick, how easy that's going to be.
Well, Steve, one of the things that I think it would be of interest to many of the people, many of my followers and subscribers, and certainly anybody listening to this, if they trade for a living, okay, one of the problems that they're going to run into is all of that money that they earn is considered to be unearned income. Okay. Now that may be good, at first glance, but we don't necessarily know if the IRS is going to turn around and say, well, let me take a look at all of your income. Let me take a look at your earned and unearned income, because a lot of folks out there, they have corporate bonds, they have government bonds. They collect interest on this, on a monthly basis sometimes. Is the federal government going to turn around and say, well, we're going to take that income into consideration as well? No, I don't think anyone knows the answer to that question yet.
And again, some of the income questions, as I said, we try to stay far away from them, but we still go on the guidelines of that, of the federal poverty level. I mean, it's whatever's included in that income. If you're, making somewhat below that $90,000 threshold or $92,000 threshold, if you're below that, the subsidy is going to be, a sliding scale, but it's going to be right off your tax return. So if you're paying, if including your dividends and your interest and everything else you're making, and your W-2s and your Schedule C income, whatever you have, that's going to be, the IRS is going to look at it. Okay, here's your total income. It's just not going to be your income, just your W-2 and exclude your interest and everything else. It's your income.
Yeah.
It's the process. The idea to get everyone insured, I have no problem with that. It's just right now in the way that it's being implemented is a hard thing for people in our industry to get our hands around, because I just can't see how this is going to work smoothly and without a million people asking questions. And so, as I said, we're here to help as best we can. Again, our marketplace is small business owners, employed people, to give them, to let them know what their rights are and what they can possibly do.
So what would you say? What would you say to the small business owner or the individual, and what should they do, in order to protect their interests in your estimation?
It's basically giving them or presenting them with all the options we have at that particular time, and every situation is different. You can't pigeonhole an answer. It's like the square peg in the round hole. You can't do it. It's based on that individual's needs. It's based on how to spend their medical dollars. It depends on family history. It depends on income. It depends on their business. It depends on, are they going up? Are they going down? It's a lot of different things. There's so many variables in what we do that I really can't give an honest answer. Say, okay, here's what we should do. Our goal is to present them with choices, present them with options, present them with things that they do, and always, Nick, it's going to be the customer who decides. When you're trying to advise somebody, you're trying to work with somebody and navigate through this, the bottom line, and again, this is a financial guy. The bottom line is the money's always going to talk. Whatever their budget is, they're going to have to put a plan in their budget. I mean, we all want to have the best plan we can, but if we can get that for the least expensive price, then that's what we're going to do.
Sure.
And we try to give options. We try to show people, here are your options, and you got to decide what the best way to go is.
Interesting. Yeah, I know there are some ramifications to this act that I think, and I agree with you, that most people aren't really knowledgeable on, and they should be knowledgeable on it. And I would also have to agree with your earlier statement in regards to the government not really educating the general public in terms of, what this is. They're making it seem as though it's, it's all like paradise. It's all going to be like paradise. And what I'm seeing thus far is it's not quite like that. It's really not quite like that. So I guess from your point of view, in terms of when you go out and discuss and talk to your clients, do you and your folks attempt to educate them on the act and in terms of what it is, what the ramifications are, etc., and what they could and should do?
You have to. Today in our industry, you have to, because you have to look at their situation where they are today, and obviously let them know what's happening. As far as being easy, it's not. And I'll always tell people, and you could just look, if Senator Bacchus, who is the main person in putting this plan together, is now 2.5 years later call it a train wreck.
Mm-hmm.
How smooth can this be if you have Democrats bailing out on this?
Mm-hmm. Mm-hmm.
As far as the client, again, yeah, you have to let them know this is what's happening going forward.
Mm-hmm.
Open enrollment months away, January 1st is implementation. You have to be in compliance,
Mm-hmm.
and you may have a plan that's not compliant, and
Mm-hmm.
that's okay. If you're happy with that current plan and you want to keep it and pay the penalty, then you're fine.
Mm-hmm.
If you want to roll into the essential health benefit plan, depending on whether your state is participating or not, that's you can go. So again, we'll always defer to the client and defer to their health insurance needs first, their second, and then help them get the best program for their best price. You want to try to in a protected situation, and that's what our job is.
Gotcha. Okay. Interesting. And I guess in terms of your advisory services, your practice, I guess you operate in Pennsylvania, Delaware, Maryland. I know you're not operating, unfortunately, in New Jersey because, quite frankly, I mean, I'd love to jump on the bandwagon, but unfortunately, I live in Chris Christie land, and in Chris Christie land, they don't do that, sadly.
Yeah. Some of the states, but I will say this, though, as far as New Jersey and New York, they are guaranteed issue states, so they're actually, were like a pre-Obamacare, if you will, just like Massachusetts was, and so that's some of the states in the country have those programs, and obviously you can see where your premiums are in comparison to whether you lived here.
Mm-hmm.
Your $1,600 premium for you and your family may be $700 here in Pennsylvania for a very similar type of plan.
Mm-hmm.
Insurance still being state to state, that is the rub here, why the government wants to get involved with some nationwide type of program that's similar for everyone.
Mm-hmm.
And Nick, in a state like yours, where you're paying all that money, the plan may be less expensive for you as opposed to under the federally mandated plan, the Obamacare plan, than it is today, because you're already experiencing that in your state. Pennsylvania, the rates will definitely go up. A lot of the states that don't have that guaranteed issue situation, the rates are going to go up.
That's
and
true.
Again, for us, in our states, we out of our office run Pennsylvania, Delaware, West Virginia. We have a lot of our colleagues around the country that do business. I think we're in 39 or 40 states the last time we checked. But we try to do the best we can to put people in a better protected situation. And unfortunately, we're not in New Jersey or New York and states like that. But you can always move, Nick. There's a lot of houses here.
Believe me, I wouldn't. Believe me, I would not mind it. I would not mind it, and that may very well be the case in the time to come. You never know. You never know. may very well be, because believe me, I've got cousins of mine who have vacation homes in the Poconos, and they all tell me how great it is, and the real estate tax is nowhere near what I'm paying now, et cetera, and it's very tempting. It is very tempting, without a doubt. Without a doubt. But you also, so it also sounds like you guys operate actually in, I guess, 39 states throughout the country then.
Yeah.
Okay.
We're in a lot of states around the country, so if you have subscribers in some of those states, obviously we're not going to list them here, but if they, email us or call in and we're in one of those states, we can put them in touch with someone who can sit down with them and possibly and help them out, or at least explain to them what's happening and what we can do to help them.
Mm-hmm. Okay. Good. That's very interesting. So it's basically more than just 3 states, if you will, which is not which is pretty good. That's actually pretty good. So how what is the best way for, let's say, someone listening to this to get a hold of you folks? I guess
the best way, I guess, would be via email. Our email address is smmmss@AOL, or our toll-free number at 800-631-4459. That's the best 2 ways. And even if you have general questions about your current plan, and again, we're not in every state, we can make them, talk to each client individually and see if we can help you out, and we'll be willing to do that.
Okay, so the email address is smmss@aol.com, or the toll-free number 1-800-631-4459. Is that right?
That's correct. There's 3 M's, so it's 1 S, 3 M's, 2 S's. So it's SMMSS@AOL.
Oh.
Email is always easier because they always respond to you or actually put you in touch with a local representative in your area.
Okay.
Just to let them know what the what their rights and options are and going forward.
Wow, that's excellent. So it's even more than just 3 states. This is excellent. Hey folks, you really need to capitalize on this, because we don't know what's going to happen with Obamacare. We don't really know what's going to happen come year end. We don't know whether or not the IRS is going to consider only earned income or unearned income, or both, or if they're going to be looking at a total return or for your tax return. Well, guess what? If you're doing financial trading full time, this is something you need to think about going forward, because you're not necessarily going to fall into that $92,000 category, or you may not fall into that $92,000 category. So this is something that really, it's not related to what we do in terms of trading, but it is definitely related to your pocketbook. So I would contact Sal and his folks and see what your options are, because what you don't know can and will hurt you at times. It's like trying to make a trade in the financial markets and not knowing what the rules of the road are, or walking into a casino and not knowing how to play blackjack. I mean, that's that's a potential bankruptcy issue, if you will. So certainly some food for thought, without question. Sal, I have to say, I'd like to thank you very, very much, very, very kindly for your time. I know you're busy with clients, etc., and I appreciate you taking the time out for us and at least educating us on what this is, what the ramifications are, and also the opportunity to educate us on what the Affordable Care Act is and what the ramifications are, etc., and what someone's best option would be in that regard. I have to say, I thank you very, very much for that, Sal.
We appreciate being part of your blog, and whatever we can do to help you and your clients as well. As I said, this is a joint effort, and the more information people know, then they can make an informed decision, and that's what it's about. So, we just wish all your clients, good luck and happy hunting out there.
Hey, I thank you very much, Sal. Appreciate your time. Appreciate your efforts. All right, folks. Hope this helps, and look forward to the next time with you.